Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all over the world of crypto and blockchain. And today I have another amazing guest. And I want to welcome him to season 9 of the Crypto Hipster Podcast. My guest today is the CEO and founder of Function. His name is Thomas Chen. Thomas, welcome to the show.
It's great to be here. Thanks for having me, Jamil.
You're very welcome. Thank you for joining me. So let's kick things off, and I'll ask you first. I ask everybody the same question, get amazing answers. Only one time it didn't work, but that was still an amazing answer anyway. So my first question is this, what is your background, and is it a logical background for what you're doing now?
Yeah, I'll just give you the quick skinny here. So right out of school, I went to the University of Virginia, and right out of school, a lot of my peers thought we wanted to do banking because they recruited a lot on grounds, and it was like, all right, you either go to banking or consulting. Try to go the banking route. Did a brief stint at JP Morgan private bank, realized very quickly that it wasn't for me. And then pivoted into tech, went to Silicon Valley, did that for a couple of years. And it started to hit me during the bull market of 2017 and the subsequent bear market in 2018, when a lot of my friends were starting to go get their MBAs in fancy 3-letter schools. I had this wild idea pop in my head, which was, what if I made crypto my MBA? And what I mean by that is, if you rewind the tape to 2018, Bitcoin, I think it was like 3,000 to 6,000 range, something like that. And so at the time, it's still unproven and from a mainstream perspective. And I thought, I understand blockchain. And if this is supposed to reinvent the financial tech stack, it's a binary outcome. What is the net expected value if it works versus doesn't work? You know what? I'll give myself 2 years, see where it goes. So for the next 2 years and the next 6.5, almost 7 years, actually, I joined a company called BitGo. For those unfamiliar, BitGo is one of the largest qualified custodians, right? It filed at its post-IPO. And I recently left about 8 months ago, and I was global head of sales at BitGo, overlooking all revenue-related operations. And the question that hit me was, last year, BitGo hit 100 billion with a B in assets under custody, right? Fastest 0 to anything, 100 billion in assets for any trust company ever, right? A good majority of that was just BTC, right? So the question I had in my head was, well, this BTC is just sitting there. It's not doing anything. Our clients are just paying, some bips, some small percentages for the security of this, but they can't do anything with it. So what can we do to get them to do something with it? So that idea started. This was right around time last year when Bitcoin Fi took off with, the restaking and all these different L1s, L2s, right, side chains, etc. And to clarify, I'm not the founder of Function, but I was brought in as a CEO. So Function and the asset FBTC was incubated about just over a year ago within the teams of Mantle and Antalpha. And basically, in my head, the problem I was trying to solve is, you have a bunch of BTC assets in a wallet. How do you turn it from a passive store of value into a productive, or rather a productive asset, right? So FBTC, the asset that we have today under Function, it is an ERC20 asset, but our whole mission is to turn BTC into a productive asset vis-a-vis traditional and DeFi markets. I'll stop there. That opens up the context and conversation for a lot of different ways we can take the podcast and where you want to steer it. But that's the basis of how I ended up at this seat. Finance, tech, and now I'm at the intersection of finance and tech. And why Bitcoin? Well, Bitcoin is the largest asset, right? Digital asset, and I think it's the one that has the most long-term potential.
I like that concept, and I'm gonna explore it. The concept of being a productive asset. Let me first ask you what I believe that I also interviewed BitGo about a year ago. I don't remember the person, but I remember interviewing them.
Great.
So I'm going to ask you first what Function is all about, including your vision and your mission, and then I want to hear about your recent $10 million raise, and then I want to dive into this concept of productive asset after that.
Sure. So, from a vision perspective, when I joined the company back in January of this year and leading up to it, right, throughout the interview process, my vision was Bitcoin is going to become the reserve asset for the world, right? Just like the US dollar is the reserve asset for traditional markets. In my head, Bitcoin's become the reserve asset for DeFi. And I was expecting 5, 10 years, 5 year time, 3 to 5 year time horizon, right? Now, within the first half, excuse me, of this year, two things happened. One, all of the Bitcoin find that if the viewers are familiar with the Bitcoin staking space or Bitcoin DeFi space, at one point there was over 200 different L2s, right? Now there's probably a dozen. So the space had a lot of speculation, a lot of money was poured in, a lot of effort was poured in trying to make native BTC staking, DeFi happen on Bitcoin with Bitcoin as the primary asset. It's played its, I would say, its story, its arc, and now we're probably in the ninth inning. It's probably wrapped up. What's also currently happened is the launch of digital asset treasuries, also ETFs from last year, and also how MicroStrategy have done. So, in short, the public markets have seen that there's a power in having Bitcoin as an ETF, but also in a digital asset treasury company or DAT or DAT, where basically you have a publicly traded company that holds a specific asset, whether it's Bitcoin, Ethereum, Solana, and we're seeing longer tail assets, even including WorldCoin last week, right? So that's just the trend. And my point there is it's happening, this adoption of crypto assets is happening way faster than I thought and I would actually have expected, right? So now you have a lot of TradFi individuals experimenting with crypto assets within the frameworks that they're familiar with, which is ETFs, publicly traded companies, etc., and even RWAs or real world assets. We have the RWA conference here in Brooklyn starting tomorrow, right? So there's a confluence of traditional finance starting to adopt crypto, and a lot of crypto folks starting to adopt or get, especially under this current administration, get buy-in from the regulators to play in a much larger market, which is the traditional equities market.
Okay. That's good. That's good. So I want to get your definition of productive asset because, a lot of people say that, Bitcoin has no use. It says except for as a store of value because the technology is slow, it's outdated or whatever the arguments are against it. So I want to get what you define as a productive asset.
A productive asset is an asset that generates a return, right? So you're right. BTC in its current state, it is a proof of work blockchain. So there's no proof of stake. You can't technically stake the asset and earn staking rewards, right, for securing the chain. That's just not how Bitcoin was designed. Fine. But what you're seeing is you have all these hodlers of Bitcoin, institutional hodlers coming in, but with the public markets, MicroStrategy, I think there are more. The number of BTC being held by ETFs is larger than Satoshi themselves now, right? Especially with public markets coming in as well. So now the question is, if you are a CFO or head of treasury and you're a publicly traded company, you're starting to acquire BTC because from a fiduciary perspective, you'd be foolish not to. You examine this and yes, I'm gonna hold BTC on my balance sheet. You hold BTC just like you hold cash. At the end of this year, the market's going to start asking, what are you going to do with the BTC? Nobody really holds gold on the balance sheet, right? Gold doesn't do anything, right? So the same question is going to start being asked. My view is that the markets right now they're going to start turning punitive, and they are going to start punishing publicly traded companies that do not do anything with the BTC. More specifically, what that means is the stock is going to trade lower than the value of the actual underlying BTC assets that they hold, right? Right now, there's a premium. We're already starting to see discounts. So there's going to be a need for people to do stuff with the BTC, turn it into just sitting here, but turn it into a productive asset. Now, there's a number of different ways you can use BTC today. There are three main ways. You can trade it. You can use it as collateral to do borrowing lending, or you can stake it. When I say stake, I would put air quotes. It's less of the specific technical staking, but the different things in DeFi where you can effectively commit it to a certain function or certain operation and get some sort of reward. So generally speaking, broadly speaking, those are three broad buckets. But if you want to get nuanced, there's about 7 or 8.
I kind of do want to get nuanced because I think a MicroStrategy is, I think of my corporate days at AIG, where we built, the backend databases on Oracle or on SQL, and then we built the front end on MicroStrategy. I think MicroStrategy stopped being a software company, a front end database, and became only a BTC treasury company.
Right.
And I'm beginning to see some price discounts, right? So those 7 or 8, the way I see Bitcoin treasury companies, and I could be completely wrong, and I would love to be completely wrong, is they're just a larger holder of Bitcoin than what I do at home, but on a massive scale. Like, we're doing the same thing. We're holding Bitcoin. Like, what's the difference?
The difference is the one KPI that all publicly traded companies, these DJTs, care about, especially for Bitcoin or ETH or whatever, is Bitcoin per share. What is their share price relative to how much BTC they have? And because they're so large and they're able to do financial engineering like MicroStrategy is with Stripe and all the other subclasses, you can actually earn more by holding them than holding BTC outright in terms of appreciation, right? Because the market is pricing an additional premium onto the equity itself. Obviously, not financial advice, do your own research, but that's the game that they're playing, right? That's the game that MicroStrategy is playing. I don't think you're going to see more than, I mean, think about it as like a function of how much headspace you have. I could probably tell you at least half a dozen, maybe a dozen different digital asset trust, companies. For the retail consumer, you don't need to know that many, right? There's only maybe 1, maybe 2 that occupy your mind space, right? For Bitcoin, obviously, it's MicroStrategy, and they're leagues ahead of anyone else trying to do this. For ETH, you have 2 major players, BitMiner with Tom Lee and SharpLink, which is Joe Lubin, right? And of course, there's a lot more, right? Sorry, and also Bitcoin, there's MetaPlanet, but in Japan. So what they've done is same playbook, but they're navigating a different regulatory jurisdiction in the Japanese market and have been very successful as well.
Got it. But some of these companies have no underlying business anymore except for holding Bitcoin.
That's a different question. Yes. So MicroStrategy is probably the question. To reframe that question is, what is the operating company? What do you guys actually do, right? Yes, the trend with digital asset treasuries, either companies they're doing it 2 ways. Either you are a, let's just say lifestyle company and you're rebranding, you're just holding these assets. Okay, but how are you going to outcompete a MicroStrategy and their operating team or a MetaPlanet? What gives you the credibility or authority and expertise to outmaneuver them? Don't know. And a lot of these companies are people from TradFi or crypto are identifying companies that have already listed on NASDAQ or NYSE, right? They're zombie companies not doing anything. They'll buy them out effectively and then load up on a bunch of Solana assets, Ethereum assets, BTC assets. So the reason they want to do this, why? Because the liquidity, the breadth of market access for retail users in publicly traded markets, right? Much larger than crypto at this time, right? So you think about the depth of liquidity on NASDAQ or NYSE, and how many retail users have access to these equities, especially for US market, via your brokerage, Robinhood, or Fidelity, or whatever your brokerage is, right? How many of the retail users can access the digital asset treasury and get exposure to Bitcoin that way versus, I got to download some specific wallet. I got to figure out how to do it myself, right? It's a bit of a 0 to 1. Going back to your point, it's making it simple from the user experience, right? And abstracting away the complexity in the back end.
Got it. So you have these treasury companies, massive treasury companies like MicroStrategy. Okay, you got the Bitcoin, you got the treasury, you got it there. Now what do you do?
So so that's the question, right? MicroStrategy obviously has its own, own strategies. But our view is we want to create a platform. Function today, we are a marketplace of different strategies for Bitcoin yield, what I call high integrity Bitcoin yield. So from a risk profile perspective, There are strategies that an institution would look at, an asset manager, a fund, right, and say, you know what, I can underwrite this risk. I understand what's happening. Yes. What I'm not doing is trying to find the super long tail end of DeFi where the yields are 3,000% on BTC, right? Which obviously you're going to have to ask, where's the yield coming from? Is it sustainable, right? It doesn't pass muster. So today, what Function is doing is we are curating the best Bitcoin yield strategies from third parties, and our or users of our platform can get access to those. Obviously, they take on certain risks with different strategies, but they can explore these different Bitcoin strategies. That's where we are today. The intersection of us and the digital asset treasury companies is one whereby you can imagine where these companies, as they look to deploy the BTC, just like deploy cash, right? I'm going to choose my words a little bit carefully here. You can think of it like we're not this today, right? But the analogy I want to paint is where the industry I think is headed, which is with cash, you can put it in money markets. What is the equivalent for BTC, right? Whether it's we're tackling that, there are other players trying to tackle the same challenge as well. I think it's a worthy challenge that's large enough and it has enough staying power.
Got it. So let me ask you about what these strategies are. Some of them.
Yeah, absolutely. So at a high level, I'll start with just lending, right? The main flow is actually quite simple. A lot of the yield that's being generated today in DeFi or anything is actually using cash or stablecoins. Well, how does Bitcoin fit in that equation? Bitcoin is simply the best form of collateral, right? People use it as pristine collateral, and they will lend USDC, USDT, or cash against the BTC, and you can then do whatever you want with it, right? So a lot of these strategies are about collateralization, using Bitcoin as collateral for low interest loans to fund operations, to do new investments. Excuse me. And what it also does is, because you're not selling the BTC, you're not triggering tax events, right? So this is huge for miners, especially because they might have mined the BTC back when it was at 6,000, right? Can you imagine if they got liquidated, right? So they need a way to use newly mined BTC as higher cost basis to borrow stables to fund their operations. What this means from a retail perspective, you see one use case, Coinbase and Morpho came out with a Bitcoin-backed loan program, right? A lot of different exchanges have it as well. Coinbase is probably more salient or familiar for if the audience is in the US. If you have BTC, you can use it to borrow stablecoin on the other side, right? USDC or cash, but it's probably USDC. I think it's around 4%. So where do we come into this? Well, BTC only exists if you're in a centralized exchange. Yeah, you can use BTC to borrow. But if you're exploring DeFi and Solana, Avalanche, near all these different chains, BTC does not move over, right? So you can't take BTC and put it on a lending market on Solana and say, hey, I want to borrow USDC or USDT. They don't talk to each other. So where we come in is, number one, we wrap the BTC into FBTC. So we're an issuer of this asset. And number two, we work with partners to effectively turn into a strategy that gives you yield back. So basically, we thought out the strategy for you. You take BTC and you get yield back. To put it simply, right now, we have one of the pilots we did earlier in the year was with Bybit with their Bitcoin Earn program. Users on there, all they see is Bitcoin, 1% APR, 45 days, and a button, right? They just click the button. That's it, right? We abstract away all the complexity and the operations on the other end.
That makes perfect sense to me. It also helps me view Bitcoin as DeFi, because before I was like, how's Bitcoin DeFi? Like I look at Aave, I look at Chainlink, I'm able to I work at AIG, I'm able to create a fixed income shop using Aave if I want to. I'm like, so how can you do that with BTC? Collateralization makes sense to me.
I would say there is a flywheel happening, right? When you have all these large publicly traded companies, concentration of BTC, right? People are going to want to deploy it. that demand for deployment of BTC will drive people like us and other people to build the infrastructure that's regulatory compliant, that's secure, that allows for structured products, to your point, right, to be built that you can then participate using BTC. Excuse me.
Got it. Got it. Okay, great. So, awesome. So I want to find out, you said the word, you said magic word, you said trends. So I want to find out trends. How are what are the trends that will lead to further institutional adoption of Bitcoin? You know, an example like would be like improve operations, improve efficiency. But what are some of those trends that are happening now? And what do you see coming down the pike as a result of some of these bills, like the Genius Act and like stable coins and all that? What do you foresee?
I would say the macroeconomic conditions have drastically changed under this administration. Having been at BitGo, we were pretty much playing defense, right, from under the previous administration. And there was this thing called the SAB, I think it's 121, Staff Accounting Bulletin, is what it means, 121, which basically says if you're a publicly traded company, if you hold BTC anywhere, like you're holding BTC, you have to put on your balance sheet. This is like 2020, 2021. Can you imagine if Disney wanted to participate in crypto and says, wait a minute, I have to disclose it on my earnings call? No way, right? So that guidance has, I think, since been removed. But what it goes to show is that plus the administration's announcement about the conversation about Bitcoin and 401ks, right, just elevates BTC as an asset class worthy of conversation next to equities and bonds, etc., right? That everyone's familiar from a long-term perspective. So I think that because the narrative is changing, and the current SEC chair is just very friendly. Robin, who's just talking about tokenized stocks, right? That's the trend right now. The question is, how does everybody build the infrastructure quickly in place under the right guardrails in order to facilitate this new world? So I'll give you an example what this looks like from a user experience perspective, perhaps using Robinhood, because we're probably familiar with that. They want to tokenize equities, meaning anyone who has a Robinhood account can trade, open AI, right? They're not a publicly traded company. They can tokenize the private company stock, and anyone can trade it. They want to create markets for that. What does that look like in maybe even a year or two from now? Imagine a world where, let's just say they're successful, and through your Robinhood app, you can get access to tokenized open AI stock, right? Which means Robinhood has gone out and acquired some of the secondaries, right? Let's say they acquired, like, I'm making this up, 10 million shares. They tokenize that, and then you and I and everyone else can buy up to 10 million shares because that's how much has been tokenized, right? I'm ignoring the regulatory implications for right now because I'm sure there's a lot of blockers. But what happens then is all of a sudden, once it's tokenized, it becomes composable. Once composable in DeFi, it becomes programmable. That means now I can use this tokenized OpenAI stock. Oh, what if I want to use it to run different strategies in Solana? Or what if I want to use that as collateral, right? Probably have a better rate with an equity, tokenized equity, than even BTC as collateral to borrow stablecoin and borrow whatever, right? So all of a sudden, what DeFi is doing in general with the public market narrative, plus what DeFi is doing, is turning the traditional financial marketplace into bite-sized components like Legos that are composable. You can stack them and create your own different financial. It's all financial engineering, right? Financial products, structured products, and I think we'll see a Cambrian explosion of structured products once regulation allows for clear-cut guidelines. I'll stop there. There's a lot more I can talk and rant about, but I'll stop there.
I just picture this, and hopefully the market doesn't allow for credit default swap, like crypto credit default swaps, like we had at AIG. That would destroy the market, right? So how do you protect investors while giving them the opportunity?
So I would say having access, aka the opportunity, means you take on certain risks, right? So you all have to do your own research, have to be well educated on exactly what's happening, right? Of course, if publicly traded companies and the SEC are overlooking a lot of this stuff. Of course, it's all focused on consumer and retail protection, right? So we can imagine that if this experience does exist in a Web2 brokerage app that we're familiar with, you're going to probably have the right disclosures or maybe like a onboarding tutorial to show you exactly what's actually happening if you partake in this specific action, right? So I think ultimately what crypto seems to always like have as a lagging factor is UX. I think all of us, all the call it the geniuses went into crypto, right, to find opportunity, but people forgot about the user experience. So the user experience is catching up. I think user experience is going to be paramount to unlocking the next wave of usability and flows. And of course, for us as an infrastructure company, we're just abstracting away. I want to be as simple where you can come to a platform. The modal you'll see is, what do you want to do with your strategy? What's your risk profile? Are you, it's similar to probably what you're familiar with, Jamil. Is it a conservative strategy, a balanced strategy, or an aggressive strategy, right? And then I can click and I see that how it's actually being allocated. If I'm okay with that, great. One button, done. And we can do, live our lives. So.
I like it. I like it. Now I want to go back to what you said about the regulatory landscape. You said something. You said it. You said that new SEC is friendly, and all I've seen is delays of ETFs not named Bitcoin. So is the SEC friendly? With all the delays and delays, all the Litecoin, Solana, all the other ETFs are being pushed back. How friendly is this SEC?
I'm not close enough to that to say, but I will say that the spirit, at least for those of us here in the trenches, right, it is night and day. And friendly does not necessarily mean that they have the operational team to move fast and break things, right? Like a traditional Silicon Valley company. Bitcoin also is not a security; it's a commodity, right? So maybe they are still. I don't know what the process is for the SEC to reviewing this stuff. Maybe they want to see how it plays out with Bitcoin and Ethereum before they start opening up for other assets.
Got it.
Also, to get another one, right? Like the narrative could be headline, oh, Bitcoin should be included in 401ks. Well, guess what? Guess who regulates 401ks? It's not the SEC, it's the Department of Labor. It's a very different regulator, right? So it's like the administration can say all these things and express that, hey, this is the direction we want to go into. But when it comes to, rubber hitting the pavement, brass tacks, you still got to navigate through the appropriate channels.
Okay. All right. That's a good to know. I did not know it was the Department of Labor. So yeah. So other bureaucracies are a lot slower. So
yeah.
It's awesome. So I want to find out, how institutions, can, now the institutions are pouring money into these treasury companies, into DATs, and we're headed that way. How can institutions make the most of their holdings, and especially with what they're not doing yet, what can they expect to be able to do?
If you're running a treasury company, you have a balance sheet, and if you're the treasury manager, right? You need to pass a certain hurdle rate for an investment. Like you need to get a return on your balance sheet. You have to deploy it and generate some threshold of return, right? And if you're starting to add BTC, sure, you have some price action on that. But then the question is, how are you hedging against the downside price action of BTC, right? If there are products like ours that help them get yield that fit their risk profile, the yield from the BTC could be a hedge, right, to the price action of BTC. Of course, more traditional ways are just going into exploring Bitcoin options and different strategies, but those have their own separate risks as well, right? Because a lot of these strategies, they're run by managers, and it's being you have to do due diligence on the managers. So if you want Bitcoin to be productive, there's always going to be risk. Heck, even as a store of value, you have custodial wallet risk, right? If you're self-custodying it, you have to trust that you are your hygiene is there, right, for security. And if you trust a third-party wallet or even a custodian, you are still taking on trust assumptions that they're doing the right thing to secure your BTC, even if you're just leaving it at Coinbase, right? So there's always risk across the spectrum. It's what amount of risk do you want to take on for the amount of return?
Yeah, I agree. Well, it's exciting, and what do you? And we're headed into what people say are going to be a new alt season. They've been saying this for a few years now, so it's going to be a really massive pump up and move up in the market in between October and December. I'm thinking I'm in the camp that says the winter. What do you see as this market in the next year or so?
I would say traditionally from the previous market cycles. Now, there's a lot of people saying it's not going to follow this market cycle, but if you look at what happened in previous market cycles, right? Once Bitcoin hits around an all-time high, or ETH hits around an all-time high, it does rotate to alt season. Why? Because those that are in the Bitcoin and ETH, they can't get enough upside there, so they rotate out and go into altcoins to go further up the risk curve, right, in terms of speculation. Now, what's changed this cycle versus last cycle? Well, the big boys are in. The institutions are in. You have digital asset treasury companies like Octo, right, which is Tom Lee's one for WorldCoin. WorldCoin is not top 10, right? So in terms of alts, we're not even talking about Solana anymore. There's some that are going down the pipe, right, reaching for altcoins that are in definitely top 30, top 25, if you will. Why is this happening? Well, bankers love it because they're just doing pipelines. It's just flow. They make money either way, right? So of course they're incentivized to facilitate this. Altcoins we'll probably see a lot more altcoin DATs. That's my prediction. And I think a lot of this time around, though, institutions are incentivized to hodl with a capital H, right? How does that affect you? Have real diamond hands, right? Structural diamond hands, if you will, right? How does that affect the dynamics of the market and rather the price action of WorldCoin now that a digital asset treasury company is holding it? It's probably going to be less volatile, but I don't know what other. I don't have this magical list of the pipeline of what the bankers are looking at by any means. So yeah, I think there will be an altcoin season in digital asset treasury. I have no idea what they are.
Right. I would love to be a fly on the wall looking at that list. So, but I want to thank you very much for your time today. It's a very enjoyable conversation, and I learned a lot. So, I want to thank you. I have one last question. Really, it's how can people find out more information about you, about Function, become a customer, client? How can they do that?
Yeah, absolutely. So you can find me on LinkedIn, first name Thomas, last name Chen. I'm also on Twitter, although I'm not not a Twitter, more of a lurker, if anything. It's just Thomas _FXin. And then the website, we are relaunching in about 2-3 weeks here. It's simply fxin.xyz. FXN as a shorthand for Function.
Awesome. Thank you very much for your time today.
Yep, of course. Thank you.